Is it time to buy U.S. stocks here in September? And what's still alive for 2024 pessimists? It's been a while since we've spoken with our chief equity strategist and economist, John Blank, but he joins me now with those answers, hopefully. John, is it time to buy U.S. stocks, or should investors have done that already earlier in the month?
Well, Terry, we are now talking on September the 21st, Thursday, and we have an S&P 500 at 4360 as I look at it. And we know it's down 1% today because the 10-year Treasury rate is now at 4.47%, which is 6 basis points higher than it was yesterday, but it actually is a multi-year high. So it's actually kind of striking to me, Terry, that we're only down 5% of the S&P 500 given the height of the 10-year Treasury rate. So it's actually kind of bullish in many respects because it's holding up.
So September tends to be the worst month of the year for the S&P 500. This month also saw a lot of risk events for the market, but from what I'm hearing you say, that is the market's playing out positively.
Yeah, we had this morning weekly unemployment claims fell to an extremely low level. For whatever reason, the effects of interest rates directly upon the economy, as Jerome Powell correctly pointed out yesterday, have yet to be fully played out. And so what's happening is there's kind of being a top putting in to the risk markets more from not from recession risk per se, but from the idea that people can put money into a insured CD, a brokered CD for 5% now, and just stay out of the way of this market. And that is, for a year at least, that's probably a good decision I'm making.
So what are the major risk events that will cause market volatility for the rest of the month and maybe into next?
Well, clearly interest rate risk is the top priority for the market. And the thing that's not being priced in right now is the credit event risk, the credit spread risk that might be lurking out there. And that can appear out of nowhere at any time, as we learned back in March of this year.
Do you think that recent market gains can be attributed to the outlook for earnings growth?
Correct. Terry, you've been with me for enough time to know how to state that correctly. Markets look ahead. 2024 has got double-digit earnings growth, as do 2025. And if that does play out, this market can trade up.
Stock market seems to have taken the latest economic data in stride. What do you make of that?
Again, Terry, as you and I have learned long, long ago, headlines and data that's coming in is not what the market's pricing. It's pricing next year and even late next year into 2025. So that's what is kind of missing in the dialogue right now is the market can price all the way into 2025 right now.
So do you see stocks maybe ending September on a positive note?
I don't see stocks ending September on a positive note, but I do see them ending the year on a positive note.
What are you looking for in the auto sector and other related stocks during this UAW strike? It seems to be going on.
Yeah, again, I think people are going to probably bet on a resolution to the marketplace. We saw that this morning there might be a resolution of the Hollywood strike. Obviously, it's a time for strikes. We have a labor-friendly administration in place, and people are out in the labor force are taking advantage of that. And but again, that also has the flip side of raising incomes in the economy for those who are collecting them, and that could be a positive for the market.
Okay, speaking of individual stocks, here are 3 major industrial stocks on your radar: Caterpillar, General Electric, and Sherwin-Williams.
Yeah, Caterpillar is the number 1 ranked stock as we speak on September the 21st, Terry. It's tracking up to new highs at 280. I certainly wouldn't be a buyer at the highs, but the target price is 320 from here. Growth of B for long-term investors. Got to like Caterpillar. It's one of those names that's got a 10% rise in the forward estimate revision on 2024 and a 15% rise in 2025. So like we're talking about, forward look on CAT's pretty good. General Electric, again, your target price is 130, worth of 115. Again, I look at 2024 earnings going up 12% and 2025 earnings going up 11%. That gives you your number 1 rank. Probably tracking highs a little too pricey for me, but it's a strong stock. Sherwin-Williams, another number 1 ranked stock, 12% upside to earning estimates next year and 7% the year after. This is what we're talking about. Market trading on that stuff in the future. $260, but I got a target price at 306, Terry. They're all giving you 10% upside, and that's basically tracking that earnings estimate revision that we're talking about today.
Okay, our chief equity strategist and economist John Blank on stocks with John. I'm Terry Ruffalo. Check this out. Just released 5 stocks set to double, where 4 Zacks experts each announced their single favorite pick with the potential to gain 100% and more in the months ahead. Download the private special report at zacks.com/promo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.